Has Bitcoin fallen under the same fate that gold's been suffering for decades? I'm talking about paper markets driving spot prices. Now, a lot of people want to look at JP Morgan, which of course have gotten in trouble for manipulating gold markets, and today they might be manipulating Bitcoin markets as well. My guest today, Eric Weiss, he's famously known as the person who orange-pilled Michael Saylor. Actually, he's on this interview today from Michael Saylor's yacht. He's been working with high net worth billionaires for a long time. He's at the forefront of institutional adoption, and he believes that paper Bitcoin may be one of the greatest threats to the market that we're facing today. We're going to talk about his solutions as to what he thinks can solve it, the potential risks that he sees as this all develops, and what you should be paying attention to if you want to build wealth in this new age. It's a great conversation with Eric. Let's just go ahead and jump right into it. Eric, thanks so much for jumping in. Always a pleasure talking to you. I can't wait to dig in here. Let's start off.
Likewise, thanks for having me.
Let's start off with a big question here that we're going to dive deep into. But Bitcoin treasuries, the new financial engineering arms race, if you will. Would you say, is this the birth of a new financial system or leverage and regulation trap waiting to snapshot?
I think it's just pragmatic behavior from corporations, right? I think if we zoom out a little bit, most companies don't survive for that long. And one of the main reasons companies don't survive that long is they give away their capital that they earn. And they do it in the forms of dividends and buybacks. And these big companies will give back billions and hundreds of billions of dollars over the years. And the reason they do that is investors will punish you as a company for holding US dollars. And they say, hey, you're holding on to this cash. If you don't have a better use for it, give it back. And so I think what companies are doing, and treasury companies are doing that exclusively, but just regular companies, it would make sense for any company that has cash on the balance sheet, hold it in something that is going to appreciate or not, inflate away so that your purchasing power is getting destroyed, and hang on to that capital for the future so that you can retool and compete down the road instead of returning that capital. And so I think Bitcoin treasury companies are an extreme version of that, where people are saying the capital is the main thing. We want to focus on the capital. Bitcoin's in this relatively nascent stage. We know or believe strongly that it's going to emerge into this store of value. And so we want to get as much of it as we can now. And we're happy to engage in an arbitrage where we're giving away some percentage in interest in order to get the money now so that we can have that, annual gain that we perceive being kind of pretty solid and predictable in Bitcoin in the future.
Certainly, we know that it's the best store of value, has been the best store of value now for 17 years. And so, of course, it makes sense. And I love the way that you frame that up with businesses don't know what to do with their cash, so they return it. But we have businesses, and then should they find a better way to store their cash? And then we have treasury strategy companies. And so I think there's a differentiation there, which we'll dig into. But if we think about one thing that I'm seeing, and I try to kind of break down to people, is how different what treasury strategy companies are doing versus traditional businesses. One of which is that the entire financial world is based off of discounted future cash flows and PE ratios, right? So we're buying a stock at a ratio based off of where their cash flows will be in the future. And it's maybe not as true today, but under the traditional lens, a Warren Buffett value investor lens, I'm buying this company because I believe in those future cash flows. And so, they should return some of those cash flows to me. Versus a treasury strategy company is about trying to grow the asset base, which is a different strategy altogether, isn't it?
It is. But you'd also be happy to put your money in something that the value of it was going to go up if you have liquidity and can take it out anytime. So I think from a operating business point of view, it's still a good business model. I think what treasury, if you want to get into what is the business of treasury companies, they're not just holding companies. They're not just financial engineering. They're taking Bitcoin and they're refining it in a way that appeals to different investor groups. There are convertible bond investors, there are preferred stock investors, there are folks that like all different kinds of credit instruments, there are equity investors. And what you're doing is you're taking Bitcoin, you're underpinning that security with Bitcoin, and then you're giving that investor a percentage of the return that we anticipate on getting on Bitcoin. And the reason that works is we have such a high um, estimation, guarantee, certainty, belief in the return on Bitcoin that we're able to strip off varying degrees of that return and give it to different investors. So if you look at, in the purest form, STRC strategies, preferred stock, which is currently paying an 11% annual dividend, pays monthly. What they've done there is they've said, okay, you may not like Bitcoin, but you like 11% return with monthly
Yep.
pay. We'll take the rest of the upside that we are certain is there with Bitcoin. We'll strip off 11%. We'll make it in a structure where the rate ratchets up, or we'll sell more to keep the price as close to par as we can. So we'll strip away the volatility. We'll give you, I think in strategies, view probably a third of the yield, and we'll keep 2/3 of the yield. And so it's refining Bitcoin or domesticating Bitcoin in a way that different investor groups like. And when you do that, you get their capital and fresh capital, and that allows you to buy more Bitcoin. So for the common shareholder, because all of these businesses have to benefit the common shareholder, right? Your fiduciary responsibility always goes to the common shareholder, not a debt holder, not a preferred holder. Your fiduciary responsibilities are to the common shareholder. And if the common shareholder, as a result of this, is waking up with more Bitcoin per share than they went to sleep with, then the exercise is worth doing.
Yeah. I've spent so much time down in this rabbit hole. It seems so obvious to me. And we have very similar adjacent business models in the world where, like, a bank takes deposits. They pay a yield on those deposits. I'll be very low, but they pay a yield.
Yep.
And then they invest those deposits, loaning them back out, and then they make a spread. And it's not just banks. I mean, other asset-heavy businesses, you might have a gold mining company, for example, right? Receives shareholder capital, invests into assets in the ground. They expect those assets to be worth more in the future. They pay out a yield or whatever. And so it seems very common, but for some reason, the majority of people just can't seem to figure out, even though we have these parallels. What do you think is blocking most people from just sort of realizing the simplicity and the elegance of that model?
I think the reason it's challenging for some people to accept it is they start with a cynical view of Bitcoin.
Mm.
And so the fact that this is based on Bitcoin, all of a sudden they're like, oh, this is a scam. This is part of a scam. They're leveraging up a scam, and their brain is already predisposed to view it negatively. But there've been great feedback from, and I shouldn't mention their names, but very high profile, well-known pioneers who pioneered high yield debt and shelf registrations, ATMs, and things of that nature, who were never fully appreciated for their innovations. And they've seen what strategy's done. And, they've conveyed to Michael, just how, incredible his usage of these financial instruments has been. So it is, financial engineering almost has a derogatory hint to it, but it's pretty incredible that that strategy and others are kind of teaching Wall Street how best to use some of these tools that have been around for a long time.
Yeah, I would agree with you. I mean, if you don't believe in Bitcoin's long-term appreciation and long-term use case, then none of it makes any sense.
Right.
Why would you even go into it? I mean, sure, I guess I could be a yield investor because they're guaranteeing they have assets. So, okay, I'll trust the yield. I don't believe in what you're doing, but I believe in your collateral base or your ability to repay. But from a main standpoint, yeah, if you don't believe in the long-term use case of Bitcoin, then it doesn't really make sense. But then I would ask the question, then why do most Bitcoiners misunderstand, not even be able to understand what's going on? Because they obviously believe the Bitcoin use case.
I don't know that most Bitcoiners do misunderstand. I think there's a difference between most Bitcoiners and the Bitcoiners on
Okay,
X.
good point.
So we all spend a lot of time on that platform, which I love, where there's actually free speech. Um, However, there are a lot of people on the planet, and most of them aren't on X. And Strategy, for example, has 55 million beneficial shareholders. So there are an awful lot of direct and indirect investors who do get it and do believe in it. And that's just the common stock. Then you've got, all the other securities that people hold. So I think there are a number of believers. But Bitcoin maximalists have such a strong views, and it's always struck me as peculiar that for an asset like Bitcoin that's all about freedom, that a lot of Bitcoin maximalists don't seem to want to extend the freedom to people of how they choose to
Yeah.
Bitcoin. Uh, Interesting
I think a
paradox.
lot of Bitcoiners also sort of come in with this sound money thesis and this deflationary currency. And so all you have to do is just hold it. And that's all you have to do, which is true. You can just hodl Bitcoin and outperform pretty much everybody else, the funds, et cetera. But they fail to understand the greater financial system that we have today. For example, the $300 trillion of demand for yield products. And if
Yeah.
I'm 78 years old, I need yield. I need to pay for my medicine and I need to pay for my rent, and I can't hodl for 5 years. I can't. I'm 78 or whatever, right? And so I need
Yeah.
yield today. And like Bitcoiners, so then those people shouldn't. They should just die. They can't hodl, so then they're cut out. And so like they just fail to understand the way the world is working and the demand for these types of and the need for these types of things.
Yeah. Our obligations in life are in fiat, and we've got to make mortgage payments, rent payments, car payments, whatever, food payments, whatever it is that we need our money for. And some of these yield products are great for that, because if you understand the collateral a little bit, and something like Stretch doesn't scare you because you think 5 times over collateralized with Bitcoin of a product that's yielding 11% is sufficiently secure for you, then you can put some money in that, and you'll have income and cash flow that you can, live in a fiat world in, and that will allow you to kind of leave your Bitcoin stash untouched through the volatility.
Mm-hmm. Yeah, and like I said, I mean, maybe you're older. You can't hodl for 5 years, and you can't handle the
Yeah.
volatility.
Yeah.
I look at it also as like two types of people in the world. You have consumers and creators, and so the creators are always going to create more than they consume. And so I think there's always two truths that will be there, and a lot of Bitcoiners maybe don't understand this, and so I'll get your take. But like, there's always going to be people who have created more than they've consumed, and so they have savings, and they're going to want to loan that out. And they're going to need yield because you said, they need they pay their expenses. And then there's always people that need to borrow. I need to expand my operations. I need to build factory equipment. Like there's always a demand for borrowing, and there's always people that want to loan it out. And so why wouldn't that just happen on the Bitcoin asset base as opposed to a fiat base? Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way, it's not always simple. It demands discipline, focus, and the right partner. Now that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're going to get white glove onboarding, same day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/MarkMoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life, it's for generations.
Yeah, it would. Probably my biggest peeve right now is people lending out or rehypothecating their
Yeah.
Bitcoin. I think that this is a really pernicious thing. It's incredibly negative for Bitcoin and the spot price of Bitcoin. I think in large part, it's part of what is suppressing the price. And you've got treasury companies, you've got miners, you've got individuals with lots of Bitcoin, kind of like you were saying, and they want to earn some yield on their Bitcoin, so they're lending their Bitcoin out. The, the problem with that is the borrowers of Bitcoin are not people who love and want to hold Bitcoin.
Mm.
Those people have Bitcoin.
Yeah.
The borrowers of Bitcoin are people who want to short it because you can't sell Bitcoin if you don't own it. So they have to borrow it to short it. And they've got some duration on their trade. And they say, okay, I think Bitcoin's going to go down over the next year. I'll pay you, whatever the market rate is to borrow X amount of Bitcoin from you, and then I'll sell it. And it's very possible that it gets rehypothecated again by whoever bought it. And you get this cycle of rehypothecation, which creates multiple sellers from one Bitcoin. And so we have a circulating supply of Bitcoin on the sell side of the market that is just suppressing the price. And it's a big problem, in my opinion.
Yeah, certainly. I mean, it for a lot of reasons, to your point, it sort of gives the short sellers the ammunition they need, which is one problem, but it also takes away the demand on the other side as well, right? So they're not buying the Bitcoin that they should have been. They're borrowing.
Correct.
Right?
Yeah, because when they sell it, they're not buying it, right? They're borrowing it. So they're not paying for it. They're just paying interest and then returning it, right? So yes, down the road when they close their, short or borrow, they have to deliver the Bitcoin back. But in the meantime, you're creating tons of sellers for this one Bitcoin that got loaned.
Right.
And it's killing us. And it's all because, people want to compete for single digit percentages yield on their Bitcoin.
Right. Yeah. I mean, we've been so ingrained that we have to put our assets to work and they have to earn a yield. And so they want to do that. But what do you think? I mean, because we've had cash settled futures for a long time, and which is basically the same thing. We see new types of cash settled stuff coming out. JP Morgan came out with a new structured product that doesn't actually buy Bitcoin. So all of that compounds it, or do you see the rehypothecation of the Bitcoin being something different than that?
I think it compounds it, but I do see the rehypothecation of the Bitcoin is something that's like really clear and very easy for folks to understand. And it's like, it's really pernicious. It's super evil because the way you put an asset with fixed supply to work is you take it out of circulation. It's working. By you sitting on it and not selling it and keeping it secure, it's working. And the second you loan it back out, it starts working against you.
Yeah. I talk about it like owning assets, never selling assets, and then your Bitcoin, and then I use it term like renting liquidity against the asset, or I like to think of Bitcoin and then harvesting the appreciation of the Bitcoin. So like I could turn Bitcoin into a yield asset by harvesting some of the appreciation with debt. Sort of like what Saylor is doing with Stretch, for example, but from like an individual personal level. If I also think that Bitcoin is going up by 30, 40, 50% per year compounding, I could borrow 10% against it each year, which then that debt is tax-free because it's debt. And I'm just harvesting a little bit, but I don't stop the compounding. So the asset is still compounding. It's still technically out of service, obviously, as long as you're borrowing from somebody who's not rehypothecating. Very key piece. But then I keep the asset in my custody. I keep it from being loaned back out, working against me, and I can still harvest the appreciation as well. So maybe a different way to do that.
If you have to give up some of the upside on your Bitcoin in order to get present day fiat to live, that's understandable. In the best case scenario, companies or individuals have some kind of fiat income, and they don't need to do that, and they can take whatever extra, because there's no such thing as extra money, but they take whatever money they don't need in the short term and add that to their stack. That's the ideal scenario. But for people, obviously the person who's 100% into Bitcoin, if they have to sell a little periodically or do a little, kind of debt type thing in order to live day to day, that's not what I'm talking about. I'm talking about companies with many, many thousands of
Mhm.
Bitcoin that are loaning out thousands of Bitcoin, which now there's thousands of Bitcoin for
Yeah.
sale.
Yeah. And I know, you've worked firsthand with a bunch of these treasury companies. So from the inner workings, without dropping any names, obviously, I mean, you're seeing this actually going down. People are doing this.
Not the companies that I'm
Right.
with,
But
that I'm
that you've
affiliated
seen.
with, but yes, yeah, very much so. You'll see a lot of times you'll see debt deals in these companies, and they say, okay, we'll give you this debt, but we really need to take possession of the
Right.
Bitcoin. We'll give you a lower rate on the debt if you let us, you know, encumber it personally and hold it in our. Why are they giving you a lower rate if you do that? They're doing it because they're lending it
Yeah.
out, right? And so, yeah, that's the stuff that I think is
Yeah.
problematic.
How big of a problem do you think that is? I mean, do you have any sort of estimation about like how many Bitcoins or how much this is actually influencing thing? Or is it more like, hey, we see this growing and it could become a problem, so maybe we should start talking about it and stopping it before it gets too big?
No, I think it is currently a problem. I know of large enough pools of Bitcoin that are being loaned out. So I think it's currently a problem, not a potential problem.
Okay.
I think think about it think about it in the extreme. If everybody who held Bitcoin refused to lend it out, where would the price be now, right?
Yeah.
If there was Because the truth is the vast majority of folks, and when I say folks, I mean individuals or corporations that hold Bitcoin, they're holding Bitcoin as a long-term store of
Right.
value. There are no there really aren't natural sellers that are long Bitcoin. Yes, you get your share of traders, but it's not that many, right? And so if the long-term holders just didn't let their Bitcoin get back into circulation to sell, there'd be very little, you know, supply for sale, and we'd have a supply demand imbalance and the price would go
Yeah.
up.
Yeah, I mean, we know for sure. I mean, Celsius and BlockFi that went down, and probably FTX was engaged in that as well. For sure, they were doing a lot of rehypothecation. So
Massively.
giving people very low. It's if you don't pay for the product, you are the product. So you're getting a 1% rate on a loan.
You
what do
got
you
it.
think is
Yeah.
happening? And so that was really rampant. I don't know how much I've been seeing that today, but certainly the Bitcoin treasury companies, I suppose, could do that as well. So I guess the thing is, if you do want to give your money to a Bitcoin treasury company, maybe you should just see what they're doing with the Bitcoin, making sure they don't have a policy to loan that back out.
Absolutely. Yeah.
Yeah, because you don't.
I think it's the kind of thing that at these Bitcoin for corporations conferences and stuff, this should be a hot topic.
Yeah,
Because all of the companies in this space, they're long-term believers in Bitcoin. And while the spot price of Bitcoin is not the be all end all for those of us in the Bitcoin community who have, more theoretical uh, kind of things that matter as well, the spot price matters.
yeah. I mean, it does. If it's a store of value, then it should hold its value, and so the price has to go up
Yeah.
if it's going to be a store of value.
And we're an emerging store of value, so it's got to do more than hold. It's got to go up relatively dramatically,
Yeah,
you know, in the medium term.
yeah. Now, on top of that, then we do also have the cash settled futures, and we have JP Morgan now jumping in. I'm curious your take on JP Morgan. If you've seen some of the maybe coincidental smoke, maybe there's some fire there, but it seemed like a very strange coincidence on October 10th. Trump put out the tweet about 100% tariffs on China, which then the markets came down because of that, which then sent the entire crypto market that was over leveraged into a massive downturn. You saw market makers getting liquidated, accounts getting ADL shutting accounts down that are even in profit. But then, if that wasn't enough, it seemed like the same day JP Morgan changed the margin requirements on MSTR stock, one of the most heavily traded stocks in the world. Everyone's doing options with it,
Yeah.
leverage, and they changed the margin requirement from 50 to 95%. And maybe that was just coincidental, but then they introduced a structured Bitcoin product.
Yeah. So Jamie Dimon famously started out with the strongest anti-Bitcoin rhetoric, right? Like, if I see anybody working for me trading it, I'll
Yeah.
fire them. And, it's softened and softened over time. Um, It went, then it went to, a lot of money left JP Morgan's private bank. I think it was uh like the most they'd ever have leave in a quarter.
Wow.
And it got to Diamond and he said, what's going on in the private bank? And they said, well, we won't let them buy Bitcoin exposure. So this money left to go buy Bitcoin exposure. And that's what got them to capitulate a little bit and allow people to buy GB. It was great. Only GBTC was around at that point. It was Grayscale, right? There wasn't IBA yet. And so that's what's flipped that. And then he's gotten softer and softer. And then he analogizes it to like tobacco. He's like, I don't recommend people smoke, but we don't stop people from buying Philip Morris. And now they're doing their own things. Now they're providing collateral. Now they're doing all kinds of stuff. So it's like, I think on one hand, we have to look at the progression of how he vilified us, hated us, and now more and more he's coming to participate and even potentially trying to steal some of our business, so to speak, right? And that's what happens when Wall Street comes in, right? Like they go after the money. And I think that's a win for us. I would position that as a win. I think they did it in a shitty way. But whether it was coincidental or intentional, I wouldn't have any idea. But JP Morgan went from a hater to participating.
Yeah.
So that's, in the grand scheme of things, that's not bad.
Well, I do like to think that intelligence is the ability to receive new information and change your mind. And so I do like to think that just like Saylor pivoted from his 2013 tweet about Bitcoin, just like we've seen Larry Fink pivot off of it. And I believe Larry Fink has changed his mind. Donald Trump changed his mind, and I suppose Jamie Dimon could change his mind as well, and that's okay.
Absolutely.
So they should receive new information and then change their mind, and now it's become more legitimate. So I would hope that's the case. I do think like I said, with Larry Fink, I think it's the case. Obviously, Saylor it was. Trump, I think it is. Jamie Dimon, I don't know. We're still on the fence with him. Although I don't know if you saw some of his remarks at Davos, but he's pretty based right now.
Yeah. He took some shots at tax policy in the U.S., which was kind of not party specific.
Yeah. But I think the thing that kind of worries me, though, is the product that they came out with, the structured product that they launched, is all cash settled. So they're not actually buying Bitcoin either. So it's like a paper Bitcoin thing. And so from that perspective, kind of to the point that you're making, it doesn't affect the supply and demand of Bitcoin. And actually what it does do is takes money that would normally have bought Bitcoin and instead bets it over here on the side. So that's detrimental to Bitcoin.
Without a doubt. Without a doubt. I agree with you that, there's a website, I think it's called Visual Capitalist, and they've got a great visual which shows all the asset classes in the world in cubes, so you can get a feel for like the size of that asset class. Yeah. And as you scroll down this website, it's absolutely mind-blowing when you look at all these other massive asset classes, currency, real estate, all these different things, right? And then you get down at the bottom to derivatives.
Yeah.
And it's like orders of magnitude larger than not only any other asset class, but these asset classes combined. And this is part of the growing pains of being accepted by Wall Street and getting thrown into their machine. We will suffer through these derivative products where the tail can wag the dog.
Yeah. Yeah. Which, the derivatives market is so big, people don't even know how big it is. It's well over $2 quadrillion estimated.
Yeah.
And it can wag the dog. The gold and silver markets have been suffering from this for a long time. And again, they don't even know. I've seen estimates anywhere from 100 up to 500 paper ounces for every one physical ounce. And they've sort of just like lost control over that. Yeah.
Very few people who have exposure to gold really have exposure to physical gold. Very, very few. And for context, I think all the gold that's out of the ground in the entire world wouldn't fill 2 Olympic-sized swimming pools.
Yeah, something like that.
So, yeah. So but there's a lot of gold derivatives. That's for damn
Yeah, and
sure.
we've seen, JP Morgan traders getting indicted or actually getting convicted of manipulating gold markets. They do it through like naked short selling, right? So they don't even have to
Yep.
borrow the gold in the example you're giving. They can just do it
Yeah.
naked. They don't even have it.
Yeah. It's good to be the market maker, right?
Yeah, good to be the market maker, I suppose. Now, on one hand, a lot of gold bugs might say that's kept the price of gold down, but maybe like a beach ball underwater. I mean, look at gold today. I think it almost hit like $5,000 an ounce. Incredible. At some point, maybe they can manage. They could affect some short term volatility, but over the long run, I mean, it's sort of it's going to do what it's going to do. Governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. Now, that's why I talk about Bitcoin. It's the number one way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only, they have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, the perks, if you set up auto buys, you can pay 0 fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
Yeah, I think, the animal spirits of derivatives, when they're with you, they're phenomenal. When they're against you, they're brutal. And all of these animal spirits that Bitcoin is kind of suffering through over the last year that are suppressing the price, there will come a time when the tide turns and those animal spirits are with us. And they'll be a big part of the reason that we have these green candles that, are mind boggling. So I think we have to, we have to be adults and take our growing pains, you know, and just kind of live with this new
Yeah.
reality.
Do you think that Bitcoin is maybe a little bit more immune to some of that, like unlike gold, because of its open, transparent sort of blockchain where we can see the amount of coins, where the coins are. So number one, gold, we don't really know. Bitcoin, we can see it. Number two, to your point, not a lot of people own gold because it's really hard to take custody of it unless you have like one coin. But with Bitcoin, I
Yeah,
could move it, I could custody it myself, and so maybe that sort of kind of gives it a little bit of defense.
maybe. I haven't spent a lot of time thinking about that. The transparency piece is really big. However, a lot of that breaks down with Wall Street coming in, right? Because you've got even the spot ETFs that have to buy one for one, or strategy, or some of the treasury companies, or even kind of like the aggregation at the exchanges. A lot of that transparency goes away. Uh, but it's
I
but
mean,
it's
I mean,
interesting.
yes, but funds, ETFs, public companies should report how many Bitcoin they have, and we're
Yeah,
pretty good with the internet sleuths these days. They could quickly figure out sort of like what is institutionally held Bitcoin and compare that to the overall supply of Bitcoin. And if it gets really lopsided, it's not very difficult for people just to, again, to take custody. So, for example, we saw this really kick off in 2023 when those 3 banks collapsed, which that's a whole other story. But sort of
yes, it is.
one of the main things was how fast people were able to run on the bank. So like I could literally just grab
Yes.
my phone, open up my account, hit
Yep.
transfer, gone. And banks weren't prepared for that speed, so they got caught off guards with their duration mismatch. And so
Correct.
if internet sleuths started kind of reporting public funds, Bitcoin, and we're off sides, and then a proof of funds day happens, everybody withdraws real quick. Like that's kind of what I mean. Like some of this defense that maybe could
I
keep them
agree. Yeah.
honest.
I think you're right. I think it could definitely be helpful.
What about, let's move into Bitcoin's use case as a medium of exchange. So a lot of people have thought maybe Bitcoin has failed because it hasn't become a medium of exchange. Some people say that maybe it's only going to be a store of value into the future. I know Saylor sort of talks in that way, but I'm curious your take on the medium of exchange. Number one, the use case, is that something that happens later? But number two, do you think if it actually did become a medium of exchange and people were actually custodying it, using it, if that might also help fight off this rehypothecation and paper Bitcoin that we're talking about?
The last point is a good one. I haven't thought about that, to be honest.
Right? Because if I'm
My
gonna
personal
use
view,
it as a medium of exchange, then I'm gonna
yeah,
keep it in my
yeah,
account.
you're not going to loan it out so quick. Yeah.
Yeah.
Um, Although I have to say, and I know this may not be the popular opinion, I don't think it's important for Bitcoin to be a medium of exchange. I don't think the world has a medium of exchange problem. And also, I mean, when we talk about medium of exchange, we're talking about currency,
Hmm.
right? And stable coins work very well as a medium of
Hmm.
exchange, right? There's very little cash transactions in the United States as it is. Um, Most people these days don't even carry paper money of any
Yeah,
kind,
I don't.
right? So, yeah. So we don't have a medium of exchange problem, but currency also is a very small percentage of global assets, whereas store of value is massive. So even though Bitcoin may have been shooting for medium of exchange and more of a currency, it stumbled upon being a solution to a problem that is much, much, much bigger and more valuable, which is store value. So if we didn't solve the medium of exchange problem, I think that's just fine with me. And there are technological challenges, certainly at an L1 as to why that's the case. But maybe with L2s and L3s, it becomes more functional. But I don't think it's important that Bitcoin achieves that.
I look at it. I mean, when you look through, just read the Bitcoin Standard. But if you look through thousands of years of monetary history, you'll see that we've had feathers and rocks and seashells, and then gold emerged as the best one. But it follows like this four-phase evolution of look at this feather or this rock. It's a collectible. This is interesting. And some collectibles become store of value. So a lot of rich people store wealth in cars and art. So collectibles, but only if it has the right attributes, money attributes. Could it go from a store of value into a medium of exchange? So a Mona Lisa can't
Yep.
work as money, obviously, right? Neither can a cow. So if it has the right attributes, it could be a medium of exchange, which gold did. And then eventually, if enough people use it, it could be a unit of account. So like the four phases. And like Bitcoin is unique because it's a technology that can be in all four of those, but it doesn't mean that it takes all four at the same time. So it's like an evolutionary process. So,
Yeah.
what I would say is, um, technology needs to solve problems. And to your point, the world didn't really need faster money. Like our money's pretty fast. Um, but what I would say though is that viewpoint of like we have dollars, we kind of have stable coins. I don't use cash in any way, whatever. The U.S. is 4% of the world's population. 4%. We now it's a
Yeah,
larger
but
share of GDP. But what I would say is that, for example, the lady that cuts my hair, she's from Afghanistan. She's lived here for a long time, but that's where she's from. And like, a couple of years ago when the Biden administration disastrously pulled out of Afghanistan and the Taliban took over the central bank, she's like, man, I really wish I could help out some of the ladies back in Afghanistan, but I can't send them any money because the Taliban controls the central banks. Right? If you're in North Korea, like there are parts of the world where there is a problem with currency. And it's not a big enough problem today, and it's not a problem that needs to be solved immediately. But I do think over this evolutionary arc, because
it's solved.
yeah,
It's solved, right? So, um, I think everybody would be very happy getting a stable coin or a digital dollar, right? So I think that we're going to have fewer currencies. Why would people continue to use lesser fiat currencies than the
right,
dollar when stable coins allow everyone globally to use the
yep.
dollar as their medium of exchange? So I think that I think that's sailed. I think that's good that the dollar will win that and proliferate. I think that's good for the United States. And I think it's really good for Bitcoin because imagine if Bitcoin was genuinely threatening to the US dollar as a medium of exchange. I, I think you know, the love that we're getting from the administration, which you can like it or hate it or feel whatever kind of way about it. But I think people underestimate just how uh, vulnerable Bitcoin would be at sub a couple $1 trillion to global superpowers doing everything they could to kill it.
Yeah.
And the one thing, there aren't a lot of things that would unite Republicans and Democrats, but if defending the dollar ever had a common enemy, I think you'd see some pretty good unification there. So I like that US stablecoins will proliferate and the dollar will win. I think that's good, and I think it's good for Bitcoin that we can be a store of value alongside that and help each other.
Really, the long-term store of value, the global store of value is U.S. Treasuries, not U.S. dollars, right? So they're storing treasuries in their banks, and right now gold is threatening that, right? So we've seen U.S. Treasuries have gone.
The stable coins have to be backed by treasuries, so 1-to-1. So
Right.
they are.
Right. I want to get into that part
synonymous.
specifically, but like we've seen just since in the last 10 years, US Treasuries have gone from 60% to 40% of reserves, global reserves. And gold now, with partly because of the price appreciation, is now gone up to 50%. So we're seeing a flippening happening there in actual reserves. So it's like, maybe not. I don't have the exact data on this, but like how much treasury buying pressure does somebody in Venezuela, an individual bring in Venezuela or Lebanon or Turkey versus the central banks? And so it seems like the greatest threat to the U.S. dollar today is gold, right, by a long shot. And not because of a meeting exchange, but it's what we see going on in China and through Hong Kong. They just set up a whole new parallel financial system. They're using the RMB for liquidity. Everything's being settled in gold, and they've opened swap lines with 32 countries, everyone but the U.S.
Interesting.
Yeah, and so the best way to defend the dollar is stop printing money. How about that?
Yeah, I think that I agree completely. I think the chances of that happening are remote.
Yeah. Yeah, exactly. So I think about like the two main drivers for Bitcoin seems to be the store of value, which is stop printing money and then just take away the need and I store my value there. And then stop censoring transactions. Those two things. But on that side, let's go back to stablecoins for a minute. I think it's a great step. I understand that people around the world are dying to get into dollars, or literally dying because they can't get into dollars. They're watching their savings and their money they need on a weekly basis just evaporate. I mean, we saw in Iran they lost like 40%, like overnight. So it's an amazing interim step, both to preserve the dollar strength, but also help those people on a lifeline. And so the Trump administration has been. Besant specifically, his job is to sell treasuries. So Besant specifically has been pushing that. He's estimating like $3 trillion in stablecoins. Congress passed it. Trump signed it. It's done. And now the banks are trying to fight against it and hold it up.
Yeah. The banks are very opposed to it because the banks have a little monopoly on taking your money and not paying you any significant interest, as we said at the top, right? And the stable coins, since they're backed 1-to-1 with treasuries, they can take a portion of the yield from those treasuries and compete with each other and pass it on to consumers, right? To holders of the stable coin. And that scares the crap out of the banks because they can't compete with that.
Why? Why can't they compete with that?
Because they're doing fractional reserve bank. I mean, in theory they could, right? But they're not. When you give them your money, it's not necessarily backed 1-to-1 with anything.
Yep.
They can use that capital for a wide variety of things with different durations, different risk profiles, etc. So, but for the stable coins, it's pretty easy and straightforward. It's like, we have $100 billion of this stable coin. We're making 6% yield on this. We'll share 3% with you.
Yep.
Yep.
Yeah. And so what it does is it exposes their entire business model for what it is. So kind of going back to those three banks that went belly up in 2023, there was that duration mismatch. So stablecoin companies hold your money. It's equity based. And on demand, I can get my deposit back anytime I want, and I can earn the yield. But then the banks you're basically giving your money to the bank, becoming an unsecured creditor, and they're going to loan it
Yep.
out over some
Better hope you've given it to a bank that's too big to fail.
right. And then their business model is then fractional reserve. But if I'm able to take my money out and give it to a stablecoin company and earn yield, the entire fractional reserve banking system would fall apart. All right, stop what you're doing right now and book your travel to come join me in Las Vegas for the Bitcoin conference. It's the biggest event of the year, the one I look forward to the most every single year. Literally my entire year calendar is set around it. It's the biggest event, the most culturally relevant event happening in the world. The top politicians, the top bankers, the top investors, the top entertainers, everybody's gonna be there. So come check it out, April 27th through the 29th. Use my code MarkMoss to save 10%. And if you use my code to save 10%, send me a message on social media or email, and I'll invite you to a private party I'm having at the event, and I'll see you there.
If it happened at scale, yeah. And there was, I actually tweeted this comment by one of the JP Morgan guys. I can find it. Just give me a second here, where they kind of like said the quiet part out loud a little bit. Says, we always embrace competition, but the bank doesn't want to compete against a brand new parallel ecosystem of deposits and interest that has no appropriate regulation. So it's like, yeah, we're happy to compete against like products or inferior products. We just don't want to compete against a better product. And so we'll say that it doesn't have sufficient oversight or regulation. And that's why you're seeing the pushback from the banks. It's that simple. It's like, we don't want to lose capital. Like the banks, just like JP Morgan allowed exposure to Bitcoin when people started taking their money out of the bank. Like that is the holy grail of the business. People take their money out of your custody. It's a problem. And that's why they're fighting this so hard.
Yeah, unfortunately for them, that fractional reserve banking system is completely exposed. That's what I saw Brian Armstrong, the CEO of Coinbase, has been in Davos saying that. He was on, I think, CNBC saying the same thing. And he was saying the banks are trying to say stablecoins are risky, but it's backed one-to-one. It's the fractional reserve system in the bank that's risky. Yeah. And so, what happens in that, I think that's also why, we saw Caitlin try to launch Custodia Bank and she got blocked for the same reason. She wanted to do a full reserve bank. And so they don't want that better competition model to fight against.
They do not want the better competition model. It will cost them money.
The law was already passed by Congress. Trump already signed it. It seems like the cows have already left the barn. I mean, do you think the banks are strong enough to fight and pull this thing back?
I don't know. Yeah. I think what was passed was no interest paid on stable coins. And so I think right now they're happy with that.
Okay.
They're petrified of companies being able to pay interest on stable coins.
Yeah.
Meanwhile, Tether's probably ecstatic too, right?
Yeah.
Because they've got so much of this stuff out there and they don't have to share any of the income on it. It all goes to them. Yeah. Which is what makes them so damn profitable. But I think we're seeing obviously all of this stuff. Compare all of this to CBDC, right? This central bank digital currency, which would be like the most evil, awful thing ever, right? And I think amazingly to me now, politicians actually understand that, which is great. The amount of education that this community has done with politicians. I saw Ron DeSantis, governor of Florida, tweeted something in the last 48 hours, basically bashing CBDCs and understanding how evil they are. It was pretty awesome. So I think we're coming a long way on the education front with politicians, and they understand just how evil CBDCs are. And nothing converts people to Bitcoin like the threat of a CBDC.
Yeah. I mean, anything that will threaten their property and their freedom, then they're going to react to that.
Yeah.
You'd put a tweet out talking about Trump at Davos saying the U.S. must dominate crypto or China wins. And you said superpowers will fight to buy Bitcoin. So one thing that's interesting is trying to get this dollar stablecoins out to the rest of the world. Tether has
Uh-huh.
said that they go boots on the ground and try and help people learn how to use stable coins and things like that. And they said that boots on the ground, they also find China there trying to help people get into their digital yuan as well. So it is a competition.
Oh yeah.
A question I have is, if that's true, do the states, do the banks, does the U.S. keep the rules loose or loosen the rules to attract the capital? So, for example, if they push KYC regulations out, most of the world can't. The world that needs it, they can't come into it now. And so,
Yeah.
like, it's like we're gonna have to like keep regulations loose or loosen them more to bring the world in if that's what we want. But if we try to put the KYC in and squeeze it and control the flow of capital, then we're going to exclude the world. It's a tough predicament for a nation that wants to control everything.
Spot on. It will be very interesting to see. Um, that's above my pay grade which way it goes, but I do think that more than anything, politicians want control and power. And in order to proliferate US dollar stablecoins, they will have to sacrifice some of that control, oversight, and power in exchange for world dominance, so to speak. And that will be a discussion that has to be had by those groups. And I hope they come out on the side of loosening it up in exchange for uh, dollar stable coins proliferating. And I think the reason that they likely will come out on the right side there is one thing that they like equal to control is money.
Yeah,
And, uh, if you proliferate the stable coins, you get a lot of US Treasury sold because they got to be backed 1 to 1.
yeah, yeah. Um, so with all that kind of being said, the backdrop, we saw, potentially paper Bitcoin happening from a bunch of different sources, rehypothecated Bitcoin. The price of Bitcoin, I think, maybe caught a few people off guard in 2025. Underlying fundamentals seem like they worked pretty good. The price didn't cooperate. It got smoked by gold in the same window. Um, you know,
We did hit an all-time high not so
yeah,
long ago. What, 3 4 months
in
ago
quarter
we hit an
four.
all-time
Yeah,
high.
in quarter four.
Yeah. And so, that's material. And then we outperformed gold dramatically in prior periods. So I think we're seeing a little bit of this kind of
Yeah.
thing. Um,
When I look at
but yes.
the Bitcoin price priced in gold, I mean, yes, we have seen this before, but the last time we saw this was 21 to 22 when Bitcoin was selling off into the last 4 year cycle, and then it bottomed in 2022 when Bitcoin bottomed at whatever 16,000, and then we've been beating gold ever since, and now gold is beating Bitcoin
Yeah.
again, sort of like another bear market cycle here on the 4 year cycle. A lot of people have been saying that's dead.
Yeah.
I've sort of been in that camp, to be honest with you, because I think it's like global liquidity that's driving it, but if you look at the gold chart, it sort of looks like we're in that right now.
Yeah, I don't pay attention to too much technical analysis. I think, from a halving cycle perspective, I think that we've got some individual buyers out there right now that buy more than the entire natural supply of Bitcoin that the miners produce. And so maybe that greatly mitigates this cycle thing. I do think that we're suffering now relative to gold. I strongly believe there will be a catch-up period where Bitcoin materially outperforms gold. As you mentioned earlier, the one thing that gold has right now, which is helping them materially, is they've got nation state
Yeah.
buyers. And for countries who print their own money, who want to buy something, like, how great is that?
Yeah.
You know?
I know you've worked with a lot of very wealthy people and setting up funds, and you're on the Bitcoin treasury side of things, working with big investors on that side. Do you think from that side of the market, is there some growing concerns in the Bitcoin space, maybe specifically around quantum or some other market structure, or is it sort of just kind of like noise that people start talking about when the price dips?
I think the quantum thing is such FUD, and it's like you get these people who want to create and elevate a problem because they want to get rich on providing the solution. Look at and politicians are famous for this, right? Al Gore screamed his head off about climate change, climate change, climate change. He's still doing it, but he's personally made like over $300 million from solving this fictitious
Yeah.
problem, right? As he flies to Davos on his private jet. So I think we see some of that in our world on the quantum side of things. Um, I don't think quantum computing is a material midterm risk in any way for Bitcoin. Um, I think the number of logical qubits that are needed to, uh, you know, hack Bitcoin are somewhere between 200 and 2,000. And the best estimates that I've seen say that we'll be at 2 to 5 by 2030. So, and then the other thing is, I think that when the time comes, much like an iPhone, you get a system update that gets pushed out, right? There'll be a quantum resistant update, when the time is right, and it'll be approved, you know, and Bitcoin will get updated relatively quickly and be quantum
Yep.
resistant. But the more interesting thing to me is pretty much everything else is going to get hacked
Yep.
first. The Federal Reserve is going to get hacked. JP Morgan's going to get hacked. Google in your Gmail is going to get hacked. All of this is going to be hacked long before
Yep.
Bitcoin. So we will have ample time and we will have ample financial incentive as a financial network to fix it. And I think the folks promoting this FUD in particular on Twitter, I think it's a really shitty, pernicious thing to do.
Yep.
And I don't really give it much attention.
Yeah, I agree with you on that. I mean, Satoshi warned us of quantum before he left. People have been knowing about this, working on solutions. To your point, there's plenty of solutions that are available to us. It just takes one update. We transfer our coins to a new quantum address. It just seems like such an easy thing to deal with.
Yep.
So to blow it all out of
Agreed.
proportion over that. And the other thing I'd say is, to your point, we'd see everything get hacked before Bitcoin. What I would also just add to that is, you said Google would get hacked. It's probably Google or something like Google that would actually have the quantum. So it's not like
exactly. And how quickly are they going to put out something that hacks the encryption on all of your Gmail, all of your Google, everything,
Yeah.
right? Not so quickly.
Right. So it's not going to come from some basement dweller coder that comes up with this malicious quantum. It's going to come from a Google or some sort of an institution like that. And so we're going to know about it. They're not going to be using it for evil, at least at first, until it leaks. So then we have even a longer head start because, again, right, they're not going to be hacking the DoD. Google's not going to do that, I wouldn't think.
I mean, someone's going to hack into the DoD at some point.
They already do.
As computing.
They already do.
Right. And so we're going to, we'll still have plenty of time, when that happens to craft a quantum solution. And we will. There's a couple $1 trillion, and by then, maybe many, many $1 trillion financial network has plenty of incentive to protect itself, and it will.
Yeah. Yeah. All right. Well, we went around the world. That was a really helpful conversation, Eric. I appreciate you taking the time to do that.
Anytime.
I know you're working with a couple of Bitcoin companies. You're working with Orange, I think it's called, down in Brazil. Core Scientific. Anything that you want to bring people's attention to, or anything they should go take a look at?
I mean, right. The Orange BTC in Brazil is a very unique situation. The awareness in Brazil isn't quite there yet. The volume's not quite there yet. So the stock is trading at a material discount to NAV. So for Brazilians in particular, or anybody who has money that they can invest in Latin America, I think that's a really good opportunity. And in Brazil in particular, there are ways for companies to distribute assets to shareholders, which is essentially a way to bring it back to NAV should it ever need to happen. So that gap is going to close. The other nice thing about it for Brazilians in particular is if you own a publicly traded stock in Brazil, there's a lower tax rate than there is for buying and selling Bitcoin. It's like 15% versus 22%. So it's like 50% less tax. So in a lot of ways, it's a very financially good way to have Bitcoin exposure, especially if you're getting it at a discount to NAV. So I think that one's gonna do just fine. We just gotta keep working on creating awareness.
Yeah. My overall take, just in general, on the treasury space is like, they have the Bitcoin. Just don't lose the Bitcoin. Because if you believe Bitcoin's going to hit 200, 300, 500, a million, it's going to go up, right?
Correct.
And so just wait. Maybe your time frame has to be a little bit longer than you had hoped it would be. Now, if the company is in danger of losing the Bitcoin, that's another story. But for most of these companies, as long as
no, definitely not. The Bitcoin is secure, and there is a very teeny amount of debt relative to the assets. And no, we're not in any risk of losing the Bitcoin there.
Cool. Well, let's wrap it up. Eric, let me ask you one last question. What would you say the number one mistake you see smart people making right now? Maybe where they're getting confused between the narrative that they're seeing and then like the underlying structure of the market.
I think it's a couple fold. We're seeing a little bit of a lack of enthusiasm. And I think part of this comes from, we've been talking about the gold analogy, and I think it's a fair analogy. But if you rewind to a time of pre-Bitcoin, because you and I have been around for a minute, gold was not sexy. There was still no shortage of people out there who would like never own gold, right? Like I wouldn't own gold. And so I think there are a lot of people that as we become more and more like gold, that there's going to be groups of people who are a little bit ignorant to what it is, and it's not appealing to them, and that's okay. We don't have to be for everyone, and to some degree, it's good that we're not for everyone. I mean, if every millionaire, in the United States wanted to buy a Bitcoin, they can have a third of a Bitcoin, right? So, we're not going to be for everybody, but that's okay. I do think that like nothing sells like winning, and we've got a lot of people that haven't lived through some of the downturns in Bitcoin. And some of those folks are getting a little gun shy, and, people think holding is easy. And I always say, like, they'll say you got lucky, but it's not easy and it's not luck. You have to do your own research, have your conviction. And that's what keeps you from selling when things seem a little bit bleak.
Yeah. All right. Well, good stuff, Eric. Appreciate you taking the time out of your busy schedule, or yacht life, I guess.
Always a pleasure.
Yacht life.
Great
to come talk to us over here. We'll wrap it up with that. Thank you.
Awesome, man. Thanks a lot.